So lower rates don't automatically create better affordability. Sometimes they simply create more competition and you will pay for it. What's up, guys? Joshua Smith here, Queensberry Advisors, and I'm back with another Hidden Rules of Real Estate episode. This is Hampton Roads channel where you actually learn how real estate works so you can make better decisions because of it. So if you're a homeowner here in Hampton Roads, Virginia, there is a good chance you have thought this: I love to move, but I have a 3% interest rate. I hear this all the time and I completely understand. Giving up a historically low mortgage rate is a difficult decision. But today, I want to explain one of the biggest hidden rules in real estate. Sometimes focusing too much on the interest rate causes us to ignore something even more important, and that is affordability. The interest rate isn't the whole story. Now, let's be clear. Interest rates absolutely matter. You'll be a fool not to think so. They affect your monthly payment, they affect your purchasing power, and they absolutely are important. But here's a mistake many people make, and they allow this number to make the entire decision for them. Real estate decisions should never be made on just one variable. There's many variables, and a lot of them you can't control. Your house should fit your life. Think about why people move in the first place. They get married, their family grows, their children leave home, they change careers, they want a different lifestyle. Life simply changes, okay? So housing should change with it if you genuinely outgrown your home. The question isn't, can I keep my 3% mortgage forever? A better question is, and a more thoughtful one is, does my current home still serve life I'm living today? Those are very different conversations. So affordability is more important than rate. And here's one of the hidden rules of real estate, okay? Buy the payment, not the percentage. If the payment comfortably fits your budget, if you're still saving, you're still investing, you're still living the lifestyle you want, then you've made an affordable decision. And that's in any market. The interest rate is simply one component of that decision. Affordability is the bigger picture. All right. Let's talk about lower rates. They don't automatically mean better deals. Okay. Here's something many buyers overlook. There's a dynamic in the marketplace. So let's imagine rates drop by 1% next year, right? Sounds great. Lovely. But usually what happens? More buyers start to flood the market. More competition enters the market. Multiple offers become a commonplace. We've just seen this a few years ago, and sometimes we still see it now. Homes sell faster, negotiating power shifts back towards the sellers. You may save money on the interest rate only to pay significantly more for the actual house. I've seen that happen before, and for many buyers in Hampton Roads experienced it during highly competitive markets over the past few years. So lower rates don't automatically create better affordability. Sometimes they simply create more competition and you will pay for it. Today's market has advantages too. Don't forget that. Every market has trade-offs. Today's market often offers things like more inventory, more time to think, seller concessions, we like those, closing cost assistance, and also just general negotiating opportunities. Those benefits have real financial value, and sometimes they even offset a higher interest rate. Sometimes they don't, but that's not the point. The point is this: you must evaluate the entire opportunity, not just the rate. One more thing, people often ask me, what if rates come down after I buy? Well, if interest rates decrease in the future, you may have the opportunity to refinance. It is true, nobody can guarantee when rates will move or by how much, but refinancing is a real tool that exists. You could potentially change your financing later after you buy. You can't go back and buy yesterday's home at yesterday's price. So here's today's Queensberry tip, another hidden rule of real estate. Don't confuse the perfect interest rate with the perfect housing decision. Whether you're buying or selling in Virginia Beach, Chesapeake, Norfolk, Suffolk, or anywhere across the 7 cities of Hampton Roads, focus on what you can actually control. And that is the big B word, budget. Your needs, your long-term goals also you should focus on, because the home isn't the one with the lowest interest rate. That's not always the best decision. It's the one that fits your life. Joshua Smith here, Queensberry Advisor, Associate Broker with Queensberry Advisors at Keller Williams Town Center. And if you're buying or selling in Hampton Roads, Virginia, subscribe for more episodes of Hidden Rules of Real Estate, or just to learn how real estate actually works right here in our market. And if you're interested in setting up your own strategy session with me or downloading one of our free guides, please visit, real simple, queensberryadvisors.com. That's queensberryadvisors.com. And I'll catch y'all on the next one. Peace.